Welcome back, everybody, to another episode of Toxic News and Toxic Trading. This is episode 11, where we're going to be talking about these damn Bitcoin ETFs and how much money seems to be flooding into them. We also might be seeing some Ethereum ETFs. We'll discuss that, as well as some of the crypto miners, especially in Texas, are making decisions on changes to what they're going to be mining. As well, we're going to be talking about our Bitsgap Trading Bots and the performance since we've made our updates. Without any further ado, let's go ahead and get this started. So let's first talk about our Bitcoin ETFs, the ones that launched this spring. Right now, we're seeing record, as you see on the screen, if you're not watching, US Bitcoin ETFs see a record of $17 billion in net inflows. US Bitcoin exchange traded funds have set a new record, over $17 billion in inflows. This achievement was driven mostly by BlackRock, followed by Fidelity. BlackRock has around 18.9 or 19 billion, while Fidelity, which is their FBTC, is around 9.9 or almost $10 billion. Now, while all of this is happening, Grayscale, which was the original OG of these funds, and you can't see my air quotes, they experience a substantial outflow. So outflow means money's jumping out their pockets. And people are pulling their money out of Grayscale and moving it into BlackRock and Fidelity, mostly because of fees. Like the fees on Grayscale are way too high. They need to cut it. And everybody decided, all right, well, since BlackRock's price was coming in underneath that, way underneath that, and the fact that it's BlackRock and they basically run damn near everything, and of course, Fidelity holds a lot of weight itself. So everybody ran to those funds and are pulling money out of Grayscale. So as we're watching this, please understand there is only 21 million Bitcoin. I need people to really etch that in their soul. Like, just of anything else you want to deal with, just deal with scarcity. Just understand the points of scarcity, that if there's only 21 million ever going to be made and 19 million already damn gone, somewhere in the line of 6 to 8 million are in wallet addresses that are lost and never be recovered. This makes Bitcoin extremely scarce. And I don't think people get it. I don't think people get it, like how the internet was created and everybody said, oh, it's a scam and blah, 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 blah. I need people to go back in time, go way back in time, and remember that back in the day when I was young, I'm not a kid anymore, but sometimes I sit and wish I was a kid again. If we go back to 1999, if we go back to 2000, the internet was going to be a scam. It's for illegal stuff and people are selling drugs and this, that, and the third. It's going to be a fad. It's a fad. It's going to fall out. It's going to disappear. As I've told like friends like MG and all these other guys, like I've told them straight up, like, look, when Bitcoin first came out, I too thought Bitcoin was fraudulent. This was 2013. I decided I'm going to do something different and I'm going to walk a different path and I'm going to concentrate on royalties and music royalties. And that was all I was going to focus on, because the microtransactions I made from streaming made way more sense to me than the microtransactions people doing with Bitcoin. And at that time, Bitcoin was like a couple $1,000s. So I was like, I don't get it. Did not get it. It wasn't until PayPal decided to shut me down and had me verify my account. They shut down my account and had me verify because I was taking transactions I was making a bunch of spends in my PayPal account and getting cash flow in my PayPal account because of some stuff that I was doing with music, and they just froze my account with like verify. And in the freezing of my account, it's not until your accounts are frozen or you don't have a bank account. Like if you're in another, like you got first world problems, like, oh, I got a bank account, I don't understand. I got a PayPal account, I don't understand. I got a Stripe account, I don't understand. Be in a country in which you have that they've locked you out of the SWIFT system, that you have sanctions. Be in that world, or be in America and have your funding pulled. And back then, to me, it was just, hey, I'm frozen. I had to re-verify. It took X amount of days. And in that time, bills weren't getting paid because that was my own. I didn't have a bank account, or I had a bank account, but most of my money was sitting in PayPal. I stopped doing that. I no longer sit any money in PayPal. I was using PayPal as a bank account up until the point that they froze me. Bitcoin, as of the current iteration of its code, cannot be frozen. If you send a payment, it goes to the account and it cannot be sent back. So long as you're not on any weirdo exchanges that can potentially lock you out and all that other stuff. Not your keys, not your coin. If you have a private wallet and I take my private wallet and I send money from my private wallet to another person, period, point blank, you can't stop me. And I think that's what people do not get until they're stuck for Chuck talking about, oh, my bank account frozen because I said something online that some people didn't like. Now all of a sudden you're seeing why it's important. Is your money censorship resistant? That is the major significant point of Bitcoin, because my money could be frozen on PayPal. My money can be frozen at a bank account. My money cannot be frozen on my own wallet sent to somebody else, that they send me money and I give them an address. That nobody can stop that. You can't stop me. So I need people to understand that. That's the bare minimum I need you to understand. There's a scarcity rule and there's an avoidance of censorship rule that comes with dealing with Bitcoin. Now, I'm not dealing with any other coins right now. I mean, don't get me wrong. You'll see in my trading in Bitcoin, in my Bitsgap Trading Bot, you will see I am straight up in other coins. But those other coins that I'm in are just so I can buy more Bitcoin. Yeah. That is my mining operation, my cloud mining operation, which I've talked about before. So that is the major thing we got to think about. These ETFs that have launched have to buy Bitcoin. They have to put it on their books. They have to tell you how much they bought. They have to tell you how much they hold. And what you're watching in real time is the scarcity of an asset that's already scarce becoming even more scarce because it's in the hands of people who don't want you to have it. So I'm going to get off my horse right now, but I just need y'all to just gel with that for a moment. Pause and just let and reflect on that so that you can understand, if you're not putting a small portion inside a scarce asset, yes, you can go buy gold, but anybody can flood it with tungsten and other BS, or they can find another vein of gold and they can saturate the market and they can drop that ish right back down. They can manipulate silver. It's hard to manipulate, which they still can manipulate crypto. They're manipulating it now. Please don't get it twisted that all markets are manipulated. But there's just one thing they can't do forever with this. You can't make new Bitcoin. You can't tungsten Bitcoin. You can't falsify the transactional data of Bitcoin. It's one-to-one exchange at this point. So just understand that. Understand where we're sitting. This new economy that's being formed is a digital one that is cross borders. Not talking about globalization. I'm just talking about if I want to take my money someplace else and I've got a stack of gold, I can't leave the country. My assets are frozen in time. I can't move, or I can worry about getting robbed on the way. I'm not walking around with crypto. I don't have to. If I want to, I can mail something someplace, go pick it up, like a USB, whatever, go pick it up someplace else, and my money is someplace else. And I can just go to that place without my USB and get my stuff once I land. Or I can memorize my key to get to my Bitcoin and then get someplace else and then pull it up. So this is what we have to deal with, is that if your bank accounts, you can't take them with you. If you're frozen, you can sit there and say, I got gold or silver. Are you going to a store and swiping gold? Do you have a gold card that's actually with gold and not fiat? Those are the questions you're going to have to deal with right now. And deal with the fact that this is a scarce asset. But I'm going to move on. Mining CEO. Bitcoin keeps hashing despite widespread CrowdStrike network failures. Bitcoin's decentralized nature has shown a resilience amongst the widespread network failures caused by the faulty CrowdStrike software update, while major entities, including government offices and banks, face significant disruptions. Bitcoin continued to operate unaffected. This highlights the robustness of Bitcoin's Linux-based framework and its independence from centralized systems. Check that and understand that. All of the Unix systems did not have any problems with that. So Bitcoin didn't have a hiccup. It just kept on a trucking and a cranking and all that other stuff. But banks were having issues and airports were having issues and all these other places were having issues. If your money, here's another proof of concept as to why this is a new ideal. Banks had issues, Bitcoin didn't. If you need to send money through your bank and you were having any problems, you might have to wait a day, 2 days, 3 days, whatever. If I needed to send some money to somebody and they needed it immediately and they could wait 15 damn minutes. So again, another proof of concept in their world where they're trying to lock down every damn thing plus censor you. Here's another proof that this decentralized thing just kept on a trucking. And as long as a few servers out there are running, tens of thousands of them are still up, the system keeps going. So Bitcoin had no issues through that whole transactional crap through CrowdStrike and all the Microsoft crap. And again, it's Unix, Linux based. So you're going to see that the internet had no problem. Like all the web servers I managed for clients, none of those had an issue. Not one of them. Why? None of them are on Microsoft. While everybody's enterprise servers and Windows enterprise servers or their Windows-based networks and their enterprise Windows networks pretty much all blue screened out. So just realize these Linux-based systems, and especially ones like Bitcoin, are going to do way better than what's going on with the traditional finance, TradFi. Traditional finance is going to have more and more issues, while this decentralized version of a financial ledger will continue to not have those issues and will receive more and more adoption because it's receiving more and more funding. Every dollar going into an ETF is another dollar going into Bitcoin. Know that. So the next thing we're going to talk about Ethereum's ETFs that potentially may be launching soon. Now, this could potentially be exciting. I don't know. We will see. But so far this week, potentially, Ethereum ETFs are set to hit the market on the 23rd. So as of today, or the 21st, Sunday the 21st, I'm recording this. So in 2 days, so Tuesday, we're looking at Ethereum ETFs getting ready to launch. Now we will see a surge and then we'll probably see a pullback. Buy the rumor, sell the news. So we may see that. We saw a bit of that when Bitcoin's ETFs launched. and we saw the same thing. We'll probably see the same thing as the Ethereum ETFs launch. These ETFs will be available on major exchanges like the Chicago CBOE, the NASDAQ, and the New York Stock Exchange, and accessible through platforms like Fidelity, E-Trade, and Robinhood, with management fees ranging from 0.15% to 0.25%, and some offering temporary fee waivers. So they're trying to get people to jump on these things as fast as possible. These ETFs will provide new avenues for people to invest in Ethereum without investing in themselves and worrying about keys and all that other stuff. Now, again, Ethereum is different from Bitcoin. One, because if you're staking Ethereum, you'll be earning a stake. You'll be earning commissions. Well, I won't say commissions. I should say more like interest payment, but it's not really interest. You get a percentage on fees and transactions. And as these ETFs launch, it's not as scarce, quote unquote, as Bitcoin. Again, Bitcoin has its own reason for being. When I got into Ethereum at around 5 and had to sell off all my stake. So I wish I'd still held Ethereum at $5. Oh my gosh, I would be like, when we talk about that. But the fact is, Ethereum is the programming language of blockchains for now. So that's Solidity. So think of it kind of like C++, C#. What caused computers to become more successful was because the C programming language made it easier for more and more programmers to program computers in general. So you got your, Unix and Linux and Windows. So everybody programmed in C. When the web began really being important was because HTML, JavaScript, and quote unquote Flash at the time. So you had your animations in Flash, you had your JavaScript for programming, and you had your HTML for presentation. These three things put together gave you the baseline of the web. Of course, images as well, so images, Flash, HTML, and JavaScript all together made up the baseline of having a web page, becoming a digital magazine or a digital blog or a digital, not shop quite yet at the time. Over time, when we got into what they considered Web 2.0, which was the social networks and the shopping experiences that were semi-real time. When those things started happening, now you have basically the web as what we kind of see to this day. So the first phase of this transactional digital economy is, of course, Bitcoin, right? Being able to send money and move money back and forth. And the major thing is that with a cryptocurrency or a blockchain, there should not be a double spend. So if I spend money, if I send you money or send you $1, you should not be able to make a new dollar or counterfeit it and send it back out. You shouldn't be able to do that. That is what blockchain stops, because everybody is watching the chain, all the miners or the stakers, and any bad actors on the blockchain will lose their money. Or if something major happens, the chain will move away from any bad actors. They'll vote away from any bad actors trying to do anything that will corrupt the chain. So with these Ethereum ETFs launching, this means the programming language of the blockchain, one of the first ones out there, Ethereum, will now be upfront getting funding and will be a part of people's portfolios, whether it be their retirement or corporate ones or banks, or in the future, potentially even for countries to be able to hold Ethereum as a funding source of capitalization, just like they're doing with Bitcoin, being able to hold it on their books as capital. So we'll see what happens when the ETFs launch. I'm not getting my hopes up too much that we're going to see a huge spike in Ethereum, but we will see. I think that we'll get a spike. We'll see a settling down. And then maybe by fall, we may see the secondary run up as the inside any of these coins become, or really on chain, any of the coins that are being held, we begin to see like it's not going to be as liquid because there won't be as many that the coins will be somewhere else they're staking, or people have moved them off chain, and the ones that want to sell aren't going to sell, and there won't be enough to buy on these platforms. And since there won't be enough to buy on the platform, that will cause a liquidity crunch that will cause Bitcoin to pump even more. So just be prepared. We don't know, but just be prepared, because if it does decide to do this double pump, we know next year is the real run up. But we also need to look at economic factors to see whether or not the Fed begins to lower rates, what that potentially means, and see how people are treating assets. If people are just running away from all assets, Bitcoin can go further down, which then pull all assets, including Ethereum, down. So we will keep an eye. I'm not making any crazy predictions, but just want to let you know that when these ETFs launch, there'll be yet another stake in the heart of the traditional finance being the only avenue to move back and forth with. But the only thing with Ethereum that we must remember is I have to look about the censorship resistance. I'm not so sure that it's as censorship resistant as Bitcoin. I'll have to look into that, or if you know, put that in the comments below. All right, so let's move on to our next topic. Bye-bye Bitcoin, hello AI. Texas miners leave crypto for the next wave. Houston-based tech company Lancium and Denver-based Crusoe Energy Systems announced on Thursday morning a multi-billion-dollar deal to build a 200-megawatt data center just outside Abilene, Texas, that is designed to meet the unique needs of AI companies. It is the first phase of a larger 1.2 gigawatts build-out. At full capacity, Lancium president Ali Fenn tells CNBC that this will be one of the largest artificial intelligence data center campuses in the world. In the latest example, that the race to power AI and leave Bitcoin mining behind is accelerating. Now, that's hype news right there. I'm not going to give too much shakes on that, because yeah, there's a need for more data centers for AI. And I believe there's a few cryptos that are doing well. We are invested in one, but I'll show you that in the charts. They're saying that this is going to, they're shifting Bitcoin mining to AI due to increased profitability. Now, if they are leveraging this to say, hey, because you're only the hardware. Let's first do this and break this down so that you understand what's going on behind the scenes. The hardware that is used to mine Bitcoin has only one brain to do one thing, and that is mine Bitcoin. It's not out here to do nothing else fancy. It can't do AI. It can't do all that stuff. So if they're building racks of machines that are to use GPUs and CPUs to do stuff in AI, that's complete different systems. So the only thing we get out of this is that they have gigawatts of power, and part of that power is going to be used to mine AI. They have whatever. But for the most part, this is just to mine power. So they got to buy new machines. Those machines have nothing to do with Bitcoin. You can't use any of the ASIC miners that mine Bitcoin to be able to do any of this stuff. So That's why I said it sounds good on paper that, oh, we're moving away from Bitcoin. You can't sell those machines. You can't use those machines to do AI. And you have to have a reasonable need for that data to come from you particularly. So if you're in crypto, then if you're using crypto to do this, cool. Now, the article, if I'm not mistaken, does not really talk about any of the cryptocurrencies. You know what I'm saying? Yeah, there's no information of them using blockchain companies to do this. They're just talking about we're going to use some of our power for AI. So this was a big article that people were talking about. Oh, the companies in Texas are shutting down so they can do AI. They're still running a machine to be able to do some type of mining. They're just diversifying to say, not only do we want to have Bitcoin miners and we're not turning them off, we're also creating locations in which we're going to be focusing on AI. And they, again, haven't said anything about how they're going to do that and how they're going to be profitable doing that. But I have a funny feeling they're going to be leveraging either just having GPUs that they can offload into mining facilities, which would then lead itself to saying, hey, there are blockchain companies that we can utilize that can earn us revenue mining on behalf of AI through blockchain / crypto. So I'll be keeping an eye on which cryptos are going to be doing the talk for this next bull market, which will be through the rest of this year and next year. And then we go back into crypto winter. For those of you that have been watching this channel for quite some time, I keep telling y'all when crypto winter comes, it comes right at the end of the next following year of the halving cycle. So if you were here in 2016 for that halving cycle, the run-up was 2017. If you're here in 2020 for that halving cycle, the run-up was 2021. If you're currently here listening, if you're here now, this is the current cycle. Next year will be the run-up. About September, October, it's time to come out because crypto winter is right around the corner. So this is one of those hype news articles coming from CNBC, but I just wanted to put this on your radar to keep an eye out for blockchain and cryptos that are going to be mineable this segment of this crypto run. So just keep your eyes out. I'll be doing a video on AI blockchains that seem to have the forerun that started last cycle and that got through crypto winter and are prepared and poised to receive the large amount of funding that's going to come in this cycle. So with that, let us now go to our next segment, which is our market analysis. As you can see on the chart, right now we are currently sitting at 67,500. We were down, you can see we had dropped down to about 65-ish. Yeah, 65, 860. And then we're back. We've run back up to 67, 579. Major support right now is around 68,000. Major resistance is around 68,000. So if we break through that, we're really on a serious run. But as you can see, we've been running this run up for quite a few days. We're having ever since we got over that 9 count, we've been running up the last few days for almost a week or so. Since July 12th, we've been on a run up. So the support is sitting at 61,209. I don't foresee us, since we are now above the 100-day moving average. So we've gotten above the 25, the 50. We're now above the 100 moving average over the last few days. So Bitcoin is back in potential bull run capacity. We, of course, will most likely test this 68,649 mark again. And we may even test coming back down to 64. But the next point after that is at 71, which was our last major high. If we go on our weekly, this week, I said earlier in the post like a week or two ago, if we got a significant surge, we won't hit this, but if we don't get that significant surge, we drop off. So we got a significant surge, but don't think that this dip is still not happening. As I've always said, within 3, you're going to potentially have that dip. So even if it doesn't hit or strike immediately, doesn't mean that that dip won't happen or didn't happen. So we're still keeping an eye out, but because it pumped, it's now got room for going back down and then just testing and jumping back up. So I'm not looking at any major breakdown as we move past summertime. I don't really see that happening as we're getting ready to swing deeper into an upswing for the rest of this year. Now, we'll see, but November dip is hitting, most likely only going to bring us back down a little bit once we start tracking later in fall. So even when the November dip hits, I don't think that we're going to get too far down the pipe for that. I think we're going to keep running up, and any dip that happens in November is us just testing a support level that happens towards this month or next month. So we will see where we go. I think that if we go higher and break all the way up to the 80,000 zone, I think that when November dip potentially comes, I think when the November dip potentially comes, we'll be back in pocket into these zones again where we're at. And then we can ride back up. But we will see. Now, as we look at the RSI, we can see we're getting ready to potentially cross negative again. And as we look at the Willy, we see we're crossing up to we're crossing up positive. So we're coming out of a negative segment here. We're negative right here, down here. You can see, and it correlates up here. Same thing here. We're negative through here. So as we're peaking positive, that just means that we've got some upside, but it doesn't mean that we can't go back down. But right now, the energy is seemingly getting ready to go back into positive territory. So we'll keep an eye on it and verify everything. Right now, again, I'm planning for more upside, and that's why we went ahead and got our Bitsgap bots in play. Currently, some of our bots are doing really well. The bots that we have made moves with or updated. You can see these are the updated bots we did starting from Suku on up. You can see each one of these are in some bot profit. They're still small, but some of these are in profit already. Our total right now is looking to be around 13.59% of what all of our bots are trading, which is pretty damn good. You know, to be sitting at around 13%. I can't say that this is a month to month because some of these are over 3 months old. And they're still doing anywhere between 0.7% to 0.39% a day, average. This one's doing 0.25 a day. So the bots are trading pretty daggone well and generating some decent returns. Now, I told y'all I was going to look at the AI. I will not be doing a course in the AI, and I'll show you right now why. If I want to start a new bot and I go here, you can see that the exchanges that they have are Binance, OKX, and KuCoin. All of which, unless you're Binance US specifically, all of these are not available to US, or you're not supposed to be a US person on these exchanges. So I'm not using KuCoin, I'm not using Binance, and I'm not using OKX. I am currently on Coinbase and Coinbase only. So all of these bots are Coinbase driven. So even though I'm not getting the maxed out amount of cash flow out of it, I'm still seeing a decent return from Coinbase alone. So I'm not going to kill myself trying to be on another exchange. I'll just stay where I'm at. And I'm not trying to go back and forth with logging in and out of VPNs to get into my exchanges to be able to set these up. So for now, I'm not worried about this. So AI Assistant Pro, I'm going to show you how you can kind of, if you're in the US, be able to kind of do some of this without having to do the AI portion. You go over here and let's look at the short term, which is their aggressive 0.80%, right? They've got 2 grid bots that are doing this 0.8%. These 2 grid bots are, and this is if you're on Binance. If you're on KuCoin, they have what you can do on KuCoin to get these numbers and figures, right? So if you're on Binance, you just look right here. It says the IO and Araxum. And then same here, IO, Render, and Wild. So you can see what tokens they're looking at to be able to pull these. So you can actually just go in, and if your exchange has any of these coins, you can just put them on your own grid bot and do it yourself. So like if you come here, you see this 0.51% is 20 grid bots. So you can see there's 17 more. So here's all the ones they have, like Bonk. Well, if you go over here, Bonk. So you can go in here, do some of these yourself, add them if they're in there. So like Rune might be on, I think it was on there. I think on Coinbase. Jasmy, we have that or two. At least we did. There it is, Jasmy. SHIB, have it. Near Protocol, I don't think I'm doing that quite yet. I did it last time, but not right now. I think INJ, I think the link is on there. We don't have Caspa. I would love to get some Caspa. I think Rune and Near are on Coinbase. So you can kind of pseudo create your own version of this without needing to put $1,000 down to jump into these coins via their quote unquote AI assistant. So I'm not going to be doing anything on the AI assistant because, as I showed you, I can't do anything with those exchanges, as well as you really don't need to do it. You can just run your scripts. You can look and see what they have. Or one of the strategies I do is you go to Grid, come over here, go to Coinbase, confirm, and now you have which ones you might want to jump into. Right? Which ones are doing what over the last 30 days? And jump on, like FET is doing well. AIOZ, Render. Oh, and this brings us back to what we were talking about as far as AI. I'm going to do a deeper dive, but right here, this one and Render, those two right there are your AI plays. So I have Render sitting right here. And we're going to just keep adding to the portfolio. We're going to keep generating enough cash flow so that we can keep buying this out. We're going to keep adding to our portfolio over time. As we generate more cash flow, we'll add to our portfolio. Right now, we have our portfolios pretty low because we knew there's some downside and we wanted to wait till we get in accumulation zone. And we want to be able to accumulate, but we're having our bots just trade and create the passivity we need to be able to either quarterly or every other month be able to start buying even a little bit more of these assets as we're generating more USD with our bots. So the goal is have your bots run, have them make more USD, put some of that USD into buying some Bitcoin, and then put that off, get it off exchange, and then utilize some of your profits to reinvest or add to your portfolios of your specific coins that are winning the most. So take your winners and add more to the winners. And also keep an eye on the narratives, because narrative is important. So that's currently what's going on with our trading bot with Bitsgap. We're just going to keep running it. Overall, they've been performing quite well, especially Orn and Bonk have been doing well. So that leads, at least with Bonk, leads it to a Solana narrative. And of course, they want to put Solana on an ETF. I want to hear from y'all. What's your take on what's going on with Bitcoin? What's your take on the Ethereum ETF? What do you feel? Are you bullish? Are you bearish? Please be sure to drop your thoughts in the comments so that we can get a discussion going. Also, I'm encouraging y'all to like and subscribe. This way we can get this information out to more people, and the algorithm can actually give us a little more love. We're starting to get more love, and I appreciate that. I appreciate y'all sharing it. I appreciate the fact that y'all been watching the videos. I appreciate that y'all been staying this damn long. Like, the view rates have been jumping up, and that right there is extremely, it makes me extremely happy. So thank you. I appreciate all of you that have taken the time to even listen to a new ramble. So I'm going to get out of here. It's the weekend. Go relax, have peace, be safe, and I'm going to talk to you again soon. Peace.